AB, who are you supposed to be for Halloween? What is this?
I am Spencer, the king of the markets, aka king of options trading. So, I'm gonna YOLO some trades today to live up to my costume.
Wait, we have a good story for y'all today. AB made a crazy YOLO trade yesterday that had some real consequences, potential consequences. So we're going to talk about that and more. We'll talk Apple, obviously, Amazon. We have a couple great guests for you today. So let's start the show here, AB.
Let's get ready to rumble!
ZingerNation, jam-packed show today. Peloton up 5%.
What's up, disciplined investor?
We got Benzinga CEO Jason Raznick here with us.
The man, the myth, the legend, Tom Nash.
Peter Schiff on the Power Hour with us live today.
Interesting, different, unique, innovative companies.
Mia, you are live with us on the Power Hour. What's up?
Thank you so much for inviting me on.
Jessica Billingsley, that is the CEO of Akerna.
The best trade idea resource out there.
Happy Halloween, AB, from your safety officer here at Benzinga. I hope you are looking forward to the weekend getting some candy and making some gains in your stomach.
Yes, sir. Yeah. What are you passing out for candy this year, Spencer?
It's a great question. We don't normally get many visitors in my building, but I guess I should prepare for the inevitable. So we'll probably just do, everyone's favorite candy corn, obviously.
Yuck.
All right. Enough of the Halloween talk, AB. I want to start with a crypto update today because we are coming off all-time highs, and not coming off, actually. We're there. All-time highs for Ethereum. ETH, Ether. Now at the futures are what I've got on my chart here, and you can see them on your screen. We're at $4,500 or 40, just under now, $4,500 in Ether. So congrats to all of us who are long. Me, I believe you, people in the chat, Shelly.
I'm long Ethereum, but not right now in a monetary sense. I do not have any Ethereum. I sold some a few weeks ago. But if you watch this show, this is a trade that Luke and I talked about kind of as this second wave of NFTs came about. When NFTs came back in the spotlight, we said, hey, the price of Ethereum is not reflecting the newfound popularity of NFTs. If you recall, back in about maybe January, NFTs first took off. And then there was kind of a lull where people, it seemed like, weren't as interested in NFTs as they were in that month. And then maybe a month or two ago, it started up again where NFTs were just selling for crazy amounts of money. And we said, hey, Ethereum right now is lagging behind the NFTs. And of course, Ethereum is the blockchain, is the technology behind a lot of these NFTs. So our theory was, as NFTs continue to rise, Ethereum will have to catch up with it. And that's exactly what happened. I believe when we were talking about that, Ethereum was around $3,500 or maybe even a little less than that. So if you got into Ethereum when we talked about that, you're looking nice right now. Spencer, you're still holding your Ethereum long and strong?
Yeah, still holding and would love to buy more, but I always talk about it and don't know when. And Shelly, you're right. Oof on Doge. There is only room for one meme at a time. And it can't be, the money can't be in Doge and Sheeb. It just can't. That's the rules. I'm sorry. I don't make the rules. That's just what it is. So Sheeb continuing to go higher. Doge down over 8% today. Tough break. But hey, you know what? This market has shown that if you just buy something and forget about it long enough, there's a chance you'll make your money back. That's not investment advice, but
there's a chance for sure. But you want to hear my theory on Dogecoin with Shiba right now, Spencer?
Cannot wait.
So essentially, one of the best drawing points to Dogecoin before it made its historic run up to, it got up to about 60, 70 cents, but now it's trading around a quarter, around 25 cents. One of the things that people loved about it was so cheap when it was, 0.0001 that you could buy essentially millions of Dogecoin for like a couple $100. And you could say, hey, Spencer, I have 3 million Dogecoin. And it's like a super cool thing to say. And so now that Dogecoin's a lot more expensive than Shiba Inu, you cannot buy as many Dogecoins as you can Shiba tokens for the same amount of money. So I think these people that are looking for altcoin would rather spend their money on something where they can get a substantial amount of holding. Right now, you or I could go buy 1 million Shiba for a couple $100, whereas Doge, we could only get a couple thousand Dogecoins. So I want to be a Shiba millionaire. I want to hold millions of Shiba. So I think people will continue to go to what's cheaper in hopes that coin will blow up. So I think a lot of Dogecoin buyers have now gravitated towards Shiba. Even Floki Inu is getting a lot of love the past couple of days as well. So I think if you're looking for an altcoin right now, you got to look at some of these that are a little bit cheaper than Doge.
All right. As a reminder, you can get not free altcoin, but you can get some free Bitcoin if that's your bag. If Bitcoin's not too boomer for you, but all you gotta do is download the Voyager app, enter the code ZING, ZING, make your first trade, fund your account with $100, not in that order, obviously, and they will give you $50 in Bitcoin for free. Okay, enough of the crypto update. AB, you made a wild trade. Was it you made it yesterday or you made it before yesterday?
I made it yesterday, but I already sold out of it. I don't know if I'll be able to show the
Wait, you sold it?
Value. Yeah, I had to.
I thought we agreed you were going to hold it for the laughs.
I did hold it today, and then it was up again.
Oh man. Okay.
Okay. Right. I'll break it down what happened real quick. So I bought Facebook calls yesterday while Facebook was breaking out. And I think I spent about $500 on 3 different call contracts. And then they announced the new name. Facebook took off, and my calls went up in value by over $1,000. But I could not close the position because I've talked about it on here before that I'm in a day trader. If I make too many day trades, my account on Robinhood's going to get restricted. I did not want to restrict my ability to buy or sell stocks for 60 days. So I had to hold on to them through today. And if you were watching Facebook's chart yesterday, Facebook ended up trading off those highs. So those calls just completely diminished in value. I did buy a Facebook put to kind of hedge that position. So when it was all said and done, I was pretty even today between the Facebook calls and the Facebook put. I bought to hedge it.
Was this intentional? Did you buy the Facebook call in knowing or thinking the stock was going to pop, or was it a sheer coincidence?
My thesis was, the name change would be a catalyst, but it's one of those kind of buy the rumor, sell the news. I think when it was, I think there was a pop from that. And then when it was all said and done, Facebook, I mean, you can see right there where it started selling off yesterday afternoon.
Yeah.
And so luckily I got a put at the right time to kind of recoup some of those losses. And then Facebook opened up today. So my put ended up being down, but the calls were back up. I don't know. It was a whole mess. Bottom line is I need to get out of this day trader.
Aaron, we gotta what do we gotta do to get you out of this? I mean, we gotta get your account balance up, obviously, but how do we do that? Do we just make better trades? I mean,
I think so. Yeah. I mean, here, I'll show my screen right now. So here's how it works is you have 4 day trades you can make.
We all know the PDT rule. You don't have to explain it to us.
Right. So right here, you can see I've made a day trade on Snap, Tesla, and Facebook. So if I do one more, that will be it for me, and I'll be restricted for 60 days. So yeah, I mean, Spencer, if you have any ideas of how I can raise my account value from 2,000 to 25,000,
Happy has an idea. Get a second account, man. Get on Webull or Thinkorswim or IB or Schwab or literally anywhere else will do.
Yeah, maybe Born to Be Free. He's got a good idea too. Maybe I just need to get in the BZ trading school.
That's it.
Yeah,
that's it, man. That's it right there. Anyway, when Aaron told me this, I thought, dude, you got to take the money. You got to take the money. But then I said, wait, no, don't sell. Keep it so we have something to talk about. And I thank you for partially doing that, if only for the content.
Yeah, I mean, I wish I would have held on to it today. As you can see, my account's down about a couple $100 from this trade that I bought a Baba call. I don't know. Baba's too cheap at 165. I think we're going to see buyers coming in, but this one I'm holding into next week as kind of like a short swing trade. But all right, Spencer, I'm going to go ahead and pull up my Benzinga Pro. And while we're talking about BABA, let's talk about some of these other big name tech stocks that are trading lower today. Of course, Amazon and Apple both reported earnings.
Yeah, you know what's funny is they're trading lower, but again, this is why I love looking at performance from the open. Because if you look at it from the close, it doesn't tell the whole story. You see, if you look at it from the close, you would say, "Oh, Apple's down 2% today. Oh, bad day." But from the open, Apple is actually higher, and especially in the last few minutes here, right? Apple is actually rallying. Amazon's actually rallied, right? It's a tale of two different tapes here. You've got the overnight tape. Obviously, the stock got crushed on its report, but the tape from the open is actually pretty good. So let's not ignore that. This has been an actually pretty positive day from the open for Amazon and Apple and a lot of tech, frankly. I mean, the Nasdaq is we're at like unchanged, almost unchanged on the Nasdaq right now, right? So I mean, saying Amazon is down 3%, Apple's down 2%, I think is disingenuous because it misses the part of the story that says, hey, it's actually been a pretty good 3 hours.
That's a good idea, Jay Rice. He's saying ask Jason for a raise. Maybe I'll see if Jason will fund my account till 25K. I'm not bullish on that. Cameron Dole, you said that you are buying some Apple calls, I think calls, maybe 150 puts. I don't know. Cameron, let us know what your thesis is on the trade. Do you think Apple just sold off too much? You expect a little bounce? Because I can get.
Go ahead. Sorry, go ahead.
I was just going to say, I can get talked into that. I can get talked into some Apple calls right now.
Oh, me too. Me too, 100%. I could get talked into Apple because how often do you get the chance to buy Apple on this kind of a dip? Unless you really believe that the supply chain problems that they talked about are going to persist for like years, for like 2, 3, 4 years, rather than like 2, 3, 4 quarters. Unless you believe that, there's no reason not to buy Apple on this dip. It's sort of what I think.
I think the supply chain issues will resolve themselves within, I don't think it'll be years, but we will see. I guess I don't know anything, but it would surprise me if we're still talking about that in, a year from now. We're still talking about supply chain issues, at least to the magnitude that we are right now. But the supply chain issue we were originally talking about was all about the semiconductors, and a lot of the semiconductor stocks have just been ripping. So it seems like the supply chain issue has kind of moved from just in the semiconductor industry to overall, shipping of goods. Nvidia at all-time highs has just been so strong since really the past 6 months or so, since March, has gone from about, this is split adjusted, went from about 130 up to 255. So almost 100% gain there in Nvidia over the past 6 months alone. This is one of my favorite all-time stocks. I don't really trade options on it because the contracts are just always super expensive. But I don't know. I mean, do you think, Spencer, we'll see the semiconductor shortages back in the headlines soon?
I don't know. All I know is that this space continues to be the story of the haves and the have-nots, right? AMD and NVIDIA are beasts, and like Micron and Western Dig stink. So it just nothing's really changed. It's funny. You get an industry-wide headline, and the stocks that were in favor before are still in favor, and the stocks that were out of favor before are still out of favor. So nothing's really changed.
Real quick before we get to our first guest, look at Apple on the 5-minute chart. Looks like it is making some headway here. Moved up from about $147 a share to $149 a share. So like you said, Spencer, if you just look at it from the open, you take out that move from yesterday's close, it looks good.
It looks very good. That's what I want people to understand, that it looks very good. I can get talked into Apple and Amazon. It's not very often you get the chance to buy both those stocks down 2% or more, right, on any given day. So
yeah, and even with this move from Apple, we're still looking at, down 2.3% from yesterday's close. So like you said, kind of a bargain. Shelly, we're not here to pump anything, but
also Shelly, I appreciate the implication that she thinks that we can move Apple. Heck, if we had the power to move Apple, do you think I would be here?
Yeah, I saw
it is the most widely traded stock in the world. But I respect the implication, but no, we can't.
I saw that Amazon was getting interest on Wall Street bets, and I was like, does these Wall Street bets crowd think they're gonna move Amazon?
How much daily volume does that thing trade? Billions of dollars? And yeah, okay. Keep trying, guys. Okay, hey, we're running a few minutes over. Let's bring on our first guest here. We have we're going to talk about a new ETF that is launching with Roundhill. We're not going to talk to Roundhill. We're going to talk to the person that made the index that the ETF is going to track. His name is Cocke. Is he joining us now here? AB, let's get him on here. All right, Chaz, founder of IO Digital Index Partners. Good.
How's it going?
How are we doing today?
Great. Happy Halloween. What are you dressed up as?
So I'm one of several things. I could be a construction worker. I could be a member of the Village People. I could be the Benzinga safety officer, which is a real thing that exists for the sole purpose of fire drills in our building.
I see.
Or which we haven't had in quite a while. Or it could be, I'm open to interpretation, but
I'm going with Village People. And I have to say, I was inspired by, seeing you guys. So I got my Bear Stearns residential mortgage hat on. I'm a disgraced investment banker and fan of disgraced football teams. So, it's all good. It's all good.
Awesome. So, okay, we have you on here because I came across, it came to my attention this new ETF from Roundhill. The Roundhill Digital Infrastructure ETF ticker is BYTE. So let's first talk about the investment thesis here. What is the thesis behind, first off, what does digital infrastructure even mean? And then what is the thesis behind that?
Yeah. So first, let's start by saying, we managed to secure the ticker BYTE, which is the parent company of TikTok, is ByteDance. Yeah. And yesterday, Roundhill also has the ticker Meta, which obviously is now the parent company of Facebook. So Roundhill has somehow managed to acquire two of the world's great tickers. And so Byte is an index and an ETF of 40 digital infrastructure businesses around the world. What is digital infrastructure? It's the data centers, the fiber, the last mile, the cell phone towers that data has to travel across in order to fulfill your digital needs, right? So when you want to sit back and Netflix and chill, somehow that movie has to get from Netflix in Seattle to your screen wherever you want in a high quality way. And so that's going to leave Netflix, go to a data center somewhere, be stored there, connect through to fiber, go to more data centers that are closer to the end users, get stored a copy in all those locations, and then find a pathway to your phone, whether that's across a cell phone tower or into your home through a Wi-Fi router. Okay. So all of those little pathways are digital infrastructure. And the general thesis is we don't have to pick the winner. We don't have to pick if Netflix is going to beat Disney Plus. We don't have to pick if Shiba Inu is going to beat Dogecoin. Whatever wins, it has to go across our infrastructure. So we want to basically be the derivative winner of the Internet of Everything, of the inexorable trend of digitization.
And you just said the magic words as in terms of why I've become so attracted to ETFs is you don't have to pick the winner. Even if you were the most bullish person on the internet in 1999, it was probably really difficult to say, oh, I like Amazon as opposed to, I like pets.com, right? It's so hard. It takes a certain amount of cockiness to think, certainly I can pick the winner here. No, just make a diversified bet if that's how you really feel. And that's why I love ETFs. So just to be clear, is there any crypto blockchain exposure here, or that's not the point?
So our companies have customers that are crypto, right? So if you're going to mine crypto, what are you really doing? Well, maybe you've got a computer in your house that's not very efficient. The real way you do that is you set up a server farm in a data center somewhere, right? So we own the data centers. the crypto firm is going to lease space in the data centers from us. So when I say we don't care who wins, what I mean is we're going to lease space in our data centers. We're going to lease space on our fiber for whatever service is going to take place on the internet, right? So if you believe in the digitization trend, if you believe that data consumption, which has been growing for 50 years, is going to grow for the next 50 years, we're going to provide the highways for that to happen in an efficient and fast manner.
Right. And you can see just some of the data here with regards to, the internet and its usage. So,
yes.
So let's talk about a little bit more about the exposure.
Yeah. So it's a global index, right? So we have about 65% of the assets are in the US, but the other 35% really is divided amongst the rest of the world, emerging markets, developed markets. It is really focused on, call it, 4 different categories of assets of digital infrastructure. So you've got the towers, right, and mobile infrastructure. So you're driving down the street, you see one of those big eyesores with tons of stuff hanging off the top of it.
Yeah.
That looks like cash to us. So that's one of our assets. Data centers, which really are the nodes where the internet lives and is stored, those are a core asset. Fiber providers are a core asset, and then last mile fixed infrastructure. So that might be your cable company or your fiber to the home operator or your small business high-speed internet service, right? So, as for example, as things like 5G, those kind of trends play out, those live on our infrastructure. When Verizon wants to hang 5G antennas, what that really means is they need to lease our towers, they need to lease our fiber, and try to create a ubiquitous, fast internet service. So what we like about it is it has secular growth all over the world. It's diversified. It is really the 21st century real estate play, right? This is the class A real estate of the next 50 years. And so it's inflation protected, growing faster than GDP, and priced in a fairly attractive manner. So we just think it sort of has the best of everything.
See, I like this chart here because I've got some exposure to like data center REITs, which is
yes,
part of this, but this is a little bit more diversified than that.
That's right. So instead of trying to pick which data center business is going to win,
right,
the goal here is just more data is going to be consumed. You believe more data is going to be consumed, it's going to go on our infrastructure. I would say, in my day job, when I'm not creating indexes, in the past, I used to run a very large institutional investment firm, or help lead it, I should say. And today I run a private investment firm, basically a hedge fund. What I wanted to create with this index is, how can I make a low cost version of a lot of the very best assets that we owned in our institutional portfolio and today in my private investment fund, right? So that's what this is. It's a really long-term focused theme where it can be the center of your portfolio. A lot of ETFs that I see out there, they're niche, they might be targeting something that's a little more like dessert. This is the center of your plate. This is the entree, right? I mean, it is just a very stable, high growth, cash flowing set of assets.
Can you speak a little bit about the actual construction of the index in terms of its weighting?
Yeah.
I mean, how do you decide that?
So we created a system that let's step back. So the first thing we need to do is define the universe. So one of the active steps we take is go out, find all the businesses in the world that we think qualify as digital infrastructure. Then we pull in their fundamental data around how fast they're growing, how they're valued, what their margin structure looks like, how much cash they generate, et cetera. And we have a ranking system that ranks that entire universe 1 through whatever it is, call it 100. And then we try to pick the 40 most attractively ranked businesses. So we think about three main factors: growth, soundness, and value, right? So we want companies that are secular growers. We want safe businesses. So that's what we mean by soundness. And we want value. We want to optimize for which are the most attractively priced right now and have this gradual rotation through it. So the largest position will be, at a rebalance will be around 6.5%. And then it goes all the way down to a fraction of a percent. So we end up with 40 companies. We'll have no less than 65% in the US, but that means we can have 35% everywhere else. And we have some really cool companies. We have tower companies in India. We have a fiber company in Australia. So it's stuff that's very hard for the individual to replicate themselves.
Yep. And I want to bring up this chart real fast, just as we wrap it up here, just to give you an idea of the exposure you're getting. Obviously, it's mostly U.S. Obviously, it's mostly large cap, but it's pretty diversified, outside of that. And these are the conversations that I love to have. I would much rather talk about this stuff all day than talk about an individual stock and what it's going to do today or tomorrow or this week. This, to me, because this is real. Like, these are the conversations that investors have, that allocators have, and this is the game to me. This is it. It's give me a bull thesis on this industry, give me a bear thesis on that industry, and let's talk through it here. And I would have these kind of conversations, these industry wide thematic conversations all day long, and that's why I like ETFs. Because there's so many, they're so creative, right? Like a digital infrastructure ETF. It's specific, but it's also not. You know what I mean?
That's right. No, I mean, I just sat back and said, look, we have this massive trend that is not going to stop. It's going to happen forever. And the hardest part about it is your point about 1999. Yeah, sure. If you bought Amazon, great. But if you bought pets.com, you got killed. Yeah. And by the way, you bought Amazon, you went down 91st.
That's right? A great point. You had to stomach a 90% drawdown to hold on to that guy. So
that's right. Whereas these are much more stable businesses, super predictable, and they still benefit from the same trend. So if you like day trading, my thought is put this at the center of your portfolio, then take that day trading allocation, and that goes side by side with it, right? This is the ballast to the excitement that you're trying to generate over there.
Awesome. All right, Chaz Cocke he created the Byte Index. He's joining us here on Benzinga Live. He is the founder of IO Digital Index Partners. And yes, guys, I get hyped around this stuff. I like this stuff. Like, I really like this stuff.
If you like it, come spend time with me. We'll talk about it all day.
This is fun for me. This is genuinely fun for me. I am hyped. It is not fake. It is genuine. Chaz, a pleasure to talk with you, sir. Thanks for coming on today. And again, BYTE, give those guys around here a shout out for me for the wherewithal on their ticker selection, because they've gotten it right twice now. So
they're killing it. Thanks, Spencer. So great to see you.
Thanks a lot, Chaz. AB, let's get you back. There he is. What's up, man?
How are we doing, Spencer? And I agree with the chat. I love how hyped up you get for ETFs. Something some traders might find a little, not going to say ETFs are boring.
No, this is not boring. This is fun.
A lot of traders like to pick individual stocks and whatnot. But if you like a sector, we were just talking about semiconductors before Chaz came on. So say you like semiconductors. Instead of trying to pick the winners and losers, you can just invest straight in an ETF that gives you exposure. And we talked about the Meta ETF that Chaz mentioned, because it seems like a lot of big companies, not just Facebook, are getting into the metaverse, as we can call it, and that could be the future. So I'm looking at Meta as an ETF right now. Its top holdings are NVIDIA, Amazon, Facebook, C Limited, Roblox, and I like a lot of those names individually. So I figure, hey, why not just throw some in the Meta ETF? But Spencer, let's move on from ETFs. Who's our next guest coming on?
It's actually not a guest, it's guests, plural. We have two, Luis Campos and Andres Campos, the executive chairman and the CEO, respectively, of Betterware de Mexico, ticker BWMX. I always get this one dyslexic in my head because I look at it and I see like BMX for some reason. But BWMX is our ticker. Let's get them on the show, AB.
Let's do it.
Luis, Andres, welcome to the show.
Thank you. Hi, how are you guys?
Good, Luis. I see you, and I see you're on mute though. Can you just unmute your microphone at the bottom of the screen there?
Thank you.
Awesome.
Thank you. Good morning.
Good morning. Great to see you. Great to hear from you. So, first, we've had you guys on another one of our shows before, SPAX Attack. But in case our people weren't watching that, can you just tell us about the company and what you're doing?
Yeah, sure. I probably Andres can start with that and tell you about the company.
Okay. Hi, Spencer. So we're a home solutions product company. Our brand is Betterware. We sell home solutions for all the house, from the kitchen to the bathroom, things for organization, for making your home more practical, renovation. We have different categories, more than 11 different category niches, but focus totally on home. We design our products, and then we manufacture most with OEMs in China and in Mexico. But the interesting thing is that we sell through a direct-to-consumer channel. We instead of selling in retail or e-commerce, we sell through a direct-to-consumer channel, where we have more than 1.1 million associates and distributors who sell directly to the consumer. So this makes it very interesting because we are getting directly to the consumer. So we've been on the Mexican market for more than 25 years. We are the category builders of home solutions in Mexico, and we've had a great story of growth in the past 20 years.
So I'm familiar with the direct-to-consumer model, here in the States, but I don't know as much about it in Mexico. How large is, are there many other direct-to-consumer companies? Is that a widely followed model in Mexico?
Yeah, there are several other direct-to-consumer companies in Mexico, Spencer. We are the largest sales force network in Mexico, and we basically cover all the country, more than 800 different cities and towns in Mexico, and we have been growing extraordinarily well over these 20 years, and especially the last 5-6 years. Last year we grew exceptionally well. We grew 135% in revenues last year, and more than 150% in EBITDA. This was extraordinary, and we continue growing this year. However, of course, it's been quite a challenge to adjust ourselves to this new level of operations, but we have been able to basically maintain the same level of sales force network, and we have been able to maintain our most important indicators in activity, productivity of our people, and we keep recruiting a lot of people this year. And even when we grew that much in last year, our guidance for this year is still a growth of between 45 and 49% in revenues, and a little bit more in EBITDA. Then This has been really fantastic. I mean, we almost triple the size of the business between pre-COVID and post-COVID. Then it's been exciting, and we will keep growing. Obviously, not at the same pace, but we will keep growing for the quarters and years to come.
I want to give a shout out to my man Chris Cocke for some of the research that he and the notes he gave me prior to this interview. I want to ask one of his questions here. He noted that you noted some headwinds. He kind of just referred to them. Some headwinds, including declining consumption, shifting consumer trends, and of course the ever-present supply chain madness there. So what steps are you taking to sort of mitigate those headwinds?
Andres?
Yeah. So, I mean, one of the main things that we are facing is that last year we really triggered the growth last year because of two main things. The first driver was consumption of home goods. In Mexico, as in the world, the consumption of home goods during COVID went up really high. And the second one is unemployment. Unemployment skyrocketed in Mexico last year. And a lot of those people came to our network. I mean, we went from 400,000, starting in 2020, we had 400,000 associates, and we finished 2020 with 1.2 million associates. So a lot of people looking for the opportunity with us. Now that people are going back to normal lives, obviously, a lot of these people are going back to their normal lives and not selling too much. So the challenge for us, the main challenge for us has been to keep recruiting more people while these people who came in are some of them are going out. So it's been a year of consolidation. It's been a year where instead of keep growing, because we grew 3 times the size last year, it's been a year of consolidation, and I think we've managed pretty well in that in that sense. But going forward, I think that the third quarter, I would believe, is the last quarter of consolidation, and we see a lot of rates, the recruitment rates and the churn rates coming back to normal. So starting in the fourth quarter, we're sure that we're going to keep coming back to normal growth that we had before. So in spite of those headwinds, I believe we're ready to end the consolidation phase and start growing again.
You're not the only company that benefited from the pandemic situations, and there's a whole host of them now that are having to convey that message right to the public. Like, look, the next year or so, or 2 or 3, might not be frankly as good as the last year was. How do you convince people that because normally if it were a normal environment and you said, hey, look, our growth rate's going to slow, that's a serious red flag. Obviously nothing about the last year and a half has been normal. So how do you convince people that it's not the red flag that we would normally associate slowing growth with?
Yeah, we will somehow, and probably Andres can complement this. We understand the concern of many people about our ability to grow our sales force in the quarters and years to come. I think they will see this is possible for us. And on my side, the only thing I would like to highlight, which is very important, is that as of today, as we speak, okay, our churn average weekly rate is almost at the same rate it was pre-COVID, okay? And our recruiting average weekly rate is already, okay, at the same average per week recruiting rate, the pre-COVID. Then our rates are already back to the pre-COVID level, which is allowing us to begin growing our sales force again, basically at the same pre-COVID rates. Okay. I don't know, Andres.
I mean, obviously, what happened, just to complement what Luis mentioned, is last year we saw recruitment rates skyrocket.
Yep.
Obviously, this year, obviously, churn rate skyrocketed, but now the churn rate has come back, and it's pretty much coming back, and this gives us perfect sense that the consolidation period has pretty much ended. Now, to complement that, growth going forward, we've talked about two ways of growth. One is home penetration. We estimate that we have 25% home penetration in Mexico. So we still have a lot of room to grow in household penetration. We have a lot of homes that we do not yet reach. And the other thing is share of wallet. We're still not a huge player in the share of wallet in each of the category niches where we play. If you talk about home organization, in that niche, we are a big player, but we are not a big player in many of the others, like home renovation, which we just launched a couple of years ago. We are not a big player in the cleaning products, which we also launched. And so there's different niches where we have a lot of room to grow in share of wallet with each customer. So that is where the base of the future is. And now that we have ended our consolidation period, we are convinced that we will start growing again. I mean, maybe before COVID, we were growing at above 40% CAGR. COVID was, kind of completely different. Mm-hmm. But now after COVID, I think we can still grow at double digits, maybe not at 40 or 50 plus CAGR, but I think we can grow at good double digits. No, yeah. We want to double our penetration by 2025. At the end of 2020, it was 20%. We want to go to 40. So I think that's the way we are going.
And also, I should know that you guys are one of the few companies to go through the SPAC process, at least in the last year and a half or so, 2 years, and that also offers a dividend. Can you talk about what the importance of that?
Yeah, well, we got listed in. We were the first Mexican company to get listed directly in Nasdaq, March of last year. It has been a very good experience. And regarding the dividend, we will continue with our dividend yield. Okay, our dividend yield has been around from 4 to almost 6%, and we will continue with this dividend policy for the years to come. Okay, in fact, we just submitted to the approval of our shareholders the last dividend of this year, as we committed since the beginning of the year. Then we will continue with this, which is, we believe, very attractive dividend yield.
Awesome. And then I guess the last thing I'll ask here is just what is the next upcoming catalyst for the company?
Well, I think Spencer, there are three catalysts, right? One is the one we just spoke about, that we've ended our consolidation process, and now the catalyst is that we can start growing again from next quarter to the coming quarters. The second catalyst, I would say, is international expansion. We have really gotten to master our business model in Mexico, and we believe there are countries in Latin America or other countries in America where we can grow to. I mean, basically we're category builders in Mexico, and there's other countries where we can be the category builders as well. So that could be a second one. And the third one that we've spoken about is M&A. We are focused today in home solutions. There are many companies who begin their business model in a specific product niche, and then you can expand that model to other categories of products. And we do see opportunities to do this. We are analyzing different opportunities, and we think that these three things can be important catalysts going forward.
In view of the success we have had, especially in the last few years, and especially last year, we have put together a team that is very seriously and very deeply evaluating the opportunities of geographic expansion and M&A in order to get our Betterware the Mexico management team totally focused on the organic growth of the company. Okay, then this is the way it's going now.
There's actually a good question here from the chat from Les Ram. Do you have a deal with a firm or any buy now pay later platform? Is that of interest?
You mean like a deal with a firm to finance purchases, or
not so much a firm, but do you have any buy now pay later deals or aspirations for that?
We could put in that. We have begun working with our distributors and associates on financing options. We have been piloting different things. I would not say. We have not talked about this, and I would not say expect something relevant in the coming quarters. But we are working on some pilot tests in this sense.
Awesome. All right, Andres, Luis, I want to thank you both. Luis Campos is the executive chairman. Andres Campos is the CEO of Betterware de Mexico, ticker BWMX. There's the chart up on the screen. Guys, thank you so much for coming on today. I appreciate the time.
Thank you, Spencer.
Thank you, guys.
Bye.
Always tough to do two interviews at the same time, so I appreciate them both for hopping on with me here today. AB is going to pop on for a second, and we'll hang out with y'all for a little bit. We were supposed to have a 1 o'clock guest. I think he had to cancel, which is quite okay. So AB and I are probably going to just hang out with y'all, not for the full hour. I'm sure we'll hop off. Moon or Bust is going. It will be on today at 2 o'clock. I don't want to really spend too much more time talking about crypto because those guys have their plate full with. And frankly, they know more about it than we do. So we'll save the crypto, whether it's the mainstream cryptos or the shitcoin talk. We'll save that for 2 o'clock with Logan and Ryan on Moon or Bust. But hey, we got a few minutes here, AB. Let's just hang out. What else haven't we covered? There's probably a few things we haven't talked about yet.
Well, Spencer, I see Les Ram in the chat talk about a firm. Let's go ahead and pull a firm's chart up, see how it's doing today. Continuing to be an absolute monster. So let me go back to the daily candles here. We can see, this chart, it doesn't go that far back. The company went public in about January of this year. So it's only been on the markets for about 10, 11 months. But ever since the Amazon deal has announced, it spiked up about 30%. And people, I think at the time, a lot of people were kind of scared to buy it there because it had gone up so much. And then another spike up I think the first spike up was on Apple news. And then the second one was the Amazon deal. And even since the Amazon deal, it's gone up another 50% since then. So this chart looks really strong right here. I don't know, too much about the industry of buy now, pay later to know. I know that a firm is the leader in it.
I don't know if they're, I don't know if that maybe in the US they are, but they're definitely not the leader globally.
Who's the leader globally?
Well, Square just bought Afterpay, right?
Okay.
This deal, right? So, and I know there's more in the UK as well. What's crazy is buy now or pay later isn't even that new of a concept. That's basically the model of Rent-A-Center. just with more fees, right?
Yeah, I mean, I think
Isn't it
Walmart used to do it with what rollover, layover, or whatever.
layaway?
Layaway,
Yeah,
yeah.
this isn't even a new. This is basically just layaway, isn't it? I think it is.
I think something that is slightly concerning about this space is I don't know like how it doesn't seem like a firm or any of these ones that you can just do on your own when you're checking out really vet the customers to see like their credit score or anything. And the way these companies make money is off of late payments and stuff. So I could see this whole industry kind of causing some problems down the road as far as if people end up like buying stuff they can't afford and aren't able to pay back those debts. I don't know. I mean, I liked Affirm for a while when it was down here, and now up here I'm hesitant on it. I don't hold it or anything. But Affirm it continues to be strong. We'll say that.
Hey, I don't know if you saw U.S. Steel today, AB. Can you pull up the X chart? Because they had earnings. We talked about it this morning. The stock was having a good morning, and now it's having just an even better day because it's up 15% today. We are approaching. We're within a shouting distance. We're within $3-4 of a high. How far? How long of a high is that? It's like a 10-year high. We're within $4.
No. Look at the chart.
Oh, I'm sorry. You're right. So, all right. In 2018, we were at 46. I'm sorry. I started 47.
But you're right that as far as the last couple years, the high looks like to be at around $30 and change. So if we can get back up there, then maybe we can break through those highs and see it run further. This is, again, not a stock that I'm in or anything. So let me know in the chat if you've traded X at all. And let us know what else you're watching. Let's see. GREE. I'm seeing GREE. I don't know.
Wow, that thing just went from 20 to 28 in minutes. What just happened there? Big options buying. Big options buying. Call buying right now.
I don't know what. It doesn't look like we have any news on.
I like my chart better because it's easier to see.
All right.
Let's go to 15-minute is better. Look at that. Look at that move on a heavy volume. Yeah, full disclosure, I don't know. Is this a low floater? It is indeed 9 million shares. Hey, let's push this thing around for fun, right? Because we can.
Happy saying he's watching Clean Spark. This is one that we've talked about a lot. Clean Spark went on a crazy run, back in January, February, all the way up to about $40 a share, then got smacked down.
Yeah, but look at the turnaround. This is, and Mitch was talking about this yesterday. This doesn't look that bad. This is
anytime you have that very strong established trend with just, day over day with green candles, it's always good to have, the trend at your back. The trend is your friend. And until you see any clear sign of reversal, that's usually a sign that, the stock will continue to move up. Obviously, we'll have to look at, it looks like we could be at a previous support level. So right here at about $20, this will be a line in the sand to see if we either reverse here or continue moving up. If we continue moving up, it looks like the next spot that we could run into resistance is at $23. So definitely worth looking at Clean Spark for a nice little trade. And this is a company that I like the long-term outlook on it as well, because, if you've heard us talk about this stock before, essentially what the company does is they specialize in microgrid energy technology. And right now, one of the most, kind of untalked about problems in the energy sector is that we have huge grids that, big portions of the country rely on the same grid. So if the grid for, say, like the Northeast goes out, it goes from Philadelphia to New York City. And it's like, we should have, more safety in having cities on individual microgrids in case something happens, whether it's a hack or just a technical problem, whatever it is. So I think we'll see more and more microgrid technology being implemented. I don't know if Clean Spark will get a boost if the infrastructure bill ever gets signed and passed. But I mean, we talked about this stock initially. I want to say on this show on PowerHour when it was at about $13 a share before it had this run up to $40, and then of course it got smacked down. But now it's strong again, Spencer.
Hey, first off, this thing just crossed its 200-day moving average yesterday, so nice job there. And I want to say that, and there's one more thing. There's one more comment I just had. Shoot, what was it? Oh yeah, shout out if you remember the massive East Coast blackout of 2004. Put a 1 in the chat if you remember that.
Yeah, I don't know if you're familiar with Ted Koppel, Spencer, but he actually wrote a book on this problem. I think it's called Lights Out. Essentially, that it could be a big national security issue that we rely on such few grids for our energy purposes.
That was a fun day. I mean, I was just a kid. I think that was before you were born, but it was a fun day. Anyway, fun for me because I was just a kid. Fun for not the adults, obviously. Okay. What else were we watching here? So Gary, still don't know what that is. Jay said short covering. I saw some massive call buying going on. What else do we have here? I want to mention Zendesk is kind of your disaster of the day. ZEN had earnings and their whole like financial side of the C-suite is gone. So that stock has gotten punished in the last couple of months here. Really, actually, most of the year. ZEN. I've got the Pro Movers tool open. I got gainers on the top, losers on the bottom. Well, losers I need to fix actually. That's
Chris Cocke wants you to look at the DWAC headline on Benzinga Pro.
Okay. Is it recent?
I don't know.
Trump's Truth app gets formal demand to stop violating software license. Oh man. What is this? All right, so who's the company in question here? It's Mastodon. Wait a minute. I think I know that company. Hold on. I think I have a friend at that company. Let me wait 1 second here. I think one of my close friends.
Call him. Let's get him on the stream live.
Unless it's a different company, but it's got a similar name. Hold on. Let me see if let me look at this right now. Oh wait, no, that's Macedon, and this is what's the company called? Hold on, now I'm confusing myself here. So the company in question is Mastodon. Yeah, not the same. Oh, they sound so similar. I thought I could get someone from that company on the show here, but it's a different company. Never mind. I'm sorry, guys. That was very exciting for about 5 seconds. So okay, so DWAC. Sorry, I got distracted.
Should we buy some puts on DWAC?
Dude, I'm terrified of that. No, I'm horribly afraid of this stock. I'm afraid of betting on it. I'm afraid of betting against it.
What's the all-time high on DWAC? DWAC broke 100 that day. It was going crazy, right?
It's a lose-lose situation for me, I feel like. What's the all-time? What's the high? 190? Is that where it got to? 175? 175. Yeah. So I don't. What about you? You want to buy a call? You want to buy a put?
If I were going to buy anything, I would buy like a long-dated put, like maybe like a $50
long-dated put.
Like a $50 put that expires here. I'm just gonna let me pull up my Robinhood real quick.
And this is the craziest thing. While you do that, if you had bought like back in I don't know February, January, if you had said, "Oh, this GameStop thing is dumb. I'm gonna buy like the $10 puts on GameStop," you're screwed. Like for November, you're screwed. So. We have precedents for this. I'm afraid of this, man. I'm afraid of the DWAC. I want no part of it.
Yeah, I mean, it looks like a $50 put that expires December 17th, which is about 2 months from now, a little less than 2 months, about 6 weeks, would cost me about $1,000. So it's a little pricey. I don't think I'm going to do it for just. I think that's one of the. I think there are so many things. Or so many people that are trying to do this, buying puts on it, that it could have that effect where there's just so much short interest out there that it actually props the stock up from people having to cover. So yeah, let's not do that right now, Spencer. But I would not be surprised if we see DWAC get down to the $50 level next week.
Okay, you heard it here first. DUAC to 50. Aaron Bree said it. Come and go after him when the stock goes down.
Let's check on Apple. So Spencer, this is a weekly, we're not going to see a lot from this chart, but we can see right here what you were talking about. Here's the open today. So if you just look at the open, Apple looks great. If you take in last night's close into effect, you can see this gap. But we'll see. I mean, I want to see Apple continuing to show that there are buyers here and see it, if not get up to the close yesterday, at least make some more ground, because it looks like we're getting held up here a little bit. Let me go to the daily. Just right here, it looks like, maybe some of the momentum's running out, which can be a sign that there could be a reversal coming. Or if we see more volume and buyers coming in, then we can see it continuing to break out. I don't know. We'll see what happens with Apple today. But right now, down about 2% from last night's close. And the $150 level is kind of a psychological level as well.
Cranky Buzzer is asking about Funware. Cranky, let's just save the Funware for next week, because we're going to have Randall Crowder. He was on, if you missed it, he was at our small cap conference yesterday. He'll be on the show Wednesday. So let's just table any Funware conversations until then.
Someone in the chat's asking about SoFi, Spencer, and
why?
I know.
Why do you always ask about SoFi?
Because I know this is like one of 3 individual stocks that you actually hold.
I own more than 3 stocks. I own like 6 stocks. But
okay, Disney, SoFi.
I own Disney, SoFi, and the 4 cannabis ones, I think. And that might be it as far as stocks are concerned. But yeah, I mean, hey, my cost base is in the low 20s. So we're below that now. We came all the way back. We fought our way back from like 12 to not quite 12. We didn't get quite down there. We got down to what, like 14? Yeah, 14 all the way back to 20. Congratulations, me. And now we're back below that $20 bogey.
Oh, ETC wants to talk about Blackstone. That's one that I got into this week. But real quick, before we get to Blackstone, Chris Cocke in the chat, a U.S. Congress member bought DUAC Friday at $92 a share.
Yeah.
I believe that was
it was what's her name?
Marjorie Taylor Greene.
Yeah.
Chris, maybe that's why she's in Congress and not at JP Morgan. I don't know. But Chris, can you continue following that story to see if she sells at some point this next week? Because right now she's sitting at what, about a 20% loss, if not more than that. So I don't know. We'll see if Marjorie Taylor Greene has diamond hands or not, and see what she does with the DUAC trade, because buying it at $90 is just absurd to me. I mean,
yeah,
we'll see.
We'll see. Anyway, okay. So SoFi, I don't know what to say. I'm holding. I'm holding this one. I have no comment. I'm not doing anything. I really don't look at the stock that much. I look at it when people ask about it. I don't know. I don't know where you're long from, Cranky, or whoever asked about it. Who asked about that? Was it Cranky? Whoever?
I don't know. Someone asked about SoFi.
If you're in SoFi, if you want to share your cost base,
Antonio Miller.
Antonio, if you want to share your cost base, that's cool. If you know, that's cool too. A minute from 20. And this is one of the hardest things, but I really try to just ignore it and just do nothing, because I think I'm in it for the long term. So that means ignoring it. That means
Scarjo's asking how much Marjorie Taylor Greene bought. It was somewhere in between 15 grand and 50 grand, I believe. They have to disclose like within a window, but not the exact amount, I believe. Correct me if I'm wrong, Chris Cocke.
Dude, I have no idea.
And what was I? Oh, Blackstone. Yeah, someone asked about Blackstone. So if you were watching on Monday, we had Ross Gerber on, who talked about Spencer essentially asked him to pitch us one stock in his ETF that's not Tesla or one of the other big stocks that he does. And he did Blackstone, which was surprising to Spencer and I, because Ross Gerber's whole thing is these like big growth stocks. But his pitch was very interesting to me on Blackstone. He essentially was saying that when the executives and the owners of the company make money, you make money in the stock as well, which I like that, because a lot of times, it's nice to know that, hey, if they're making money, we're making money. And I also think we could see a little flow into some value stocks because tech has been so strong again for the past couple months. I mean, if you look at SPY's hitting all-time highs today, while the NASDAQ was kind of we'll check in. I think NASDAQ might be checking on the QQQ. Might be doing a little bit better than we started out. Yeah. I don't know. We'll see. I like the pitch on Blackstone. Ross is smarter than me when it comes to investing. He's been doing it longer, and it's got a good dividend. So I just threw some money into Blackstone. Let me know who asked about Blackstone if you're into it as well. ETC.
Wait, real fast. You just made a comment about, when the, execs make money, you make money. If and this doesn't really apply to Blackstone, but I just want to give a PSA out there. If you're looking at like broad-based ETFs and you're trying to decide, do I want to buy like the SPY, right, which is from State Street? Do I want to buy the VOO, which is the same exact thing but from Vanguard? Do I want to buy? I'm blanking on whatever BlackRock's is, but like if you're deciding these things, the tiebreaker for me was Vanguard, because Vanguard is a mutual company. The company is structured as a mutual company, which means that the customers own the company. I'm a Vanguard customer. I own a piece of Vanguard. That was the tiebreaker for me when deciding, like, you've got 3 identical ETFs that do the same thing with the same fee. I chose Vanguard because when they ever IPO, theoretically, hypothetically, then on paper at least, I would be entitled to some of that because the customers own the company. So, and the expense ratio is lower by like 1 basis point, but whatever. Okay. What were we about to talk about after that? I wanted to make that PSA about Vanguard. Oh yeah, I was going to mention AB Blackstone went ex-dividend today, I think.
Wait, I get a dividend today from Blackstone?
The ex-dividend date was it yesterday? Wait, what's today? 29th? Yeah, no, you get a dividend because you.
Beautiful. Love it.
The record date is Monday, but yes, you will get a dividend from Blackstone. Congratulations.
Love it.
I don't know what the dividend it is. Oh, it's $4 on annual.
Yeah, and Spencer, back to your point about the Vanguard ETF, I actually have. I went through the same thing because I was looking to make a recurring investment into the S&P 500.
Yeah,
and I ultimately went with the VOO and VTI, which the VTI is just the overall stock market. So instead of the 500 companies in the S&P, it's essentially just every stock on the market. And yeah, I mean, who does the SPY one?
State Street.
Spider.
State Street.
The VOO ended up, like you said, just being a little bit cheaper than the SPY. So I went with VOO.
It's basically splitting hairs, but yes, it is cheaper.
And this is honestly like one of the best ways to invest, in my opinion, is just put a recurring buy on VOO or VTI. And that way you're dollar cost averaging in. So if you do it on a weekly basis or a monthly basis, if the index is going down, you're getting a lower cost basis every month as you're getting invested in. And over time, you'll be able to reinvest those dividends that you get from there. But I get it. It's fun. It's fun for me to pick stocks and try to YOLO trade. But like you can see today, my portfolio is down 9% from trying to YOLO trade. Whereas if I just stuck diligently with this recurring buy, I'd be up today, So it's something that a lot of times I have friends ask me like, oh, how should I invest? And I'm like, look, just set a recurring buy on VOO or VTI. It's so low maintenance. You don't have to think about it. You don't have to do anything. And it's just a way to accumulate and grow wealth over time. Aaron Sachs says he's in on Vong. I don't know which one that is.
I don't know, but RKT just rocketed because they announced a deal with Salesforce, a partnership.
Who?
Rocket, RKT, Rocket, Quicken Loans. Yes.
Oh, it did.
Yes, I know. That's what I said. They just announced a deal with a partnership with Salesforce. I guess they're going to share some data and offer some services through the Salesforce cloud. All right, cool. We are a Salesforce customer, and our office is in the Rocket Mortgage headquarters. So cool. Go Rocket. I don't know why someone said that it was my Rocket. I've never owned this stock before. This is a Jason Raznick favorite, but I've never owned this stock. Not that I think it's a bad company. I don't own the stock. So, cool. Oh, Neil recommended. Oh yeah, Aaron's talking to AB.
Vong. He's talking about Vong, which is Vong is just the growth. It's Russell 1000 growth ETF.
It is VONG.
Yep.
Also, yes, it is. I see it right there. Chart all-time highs. It's funny. Growth. I thought growth was out of favor. Yet here we are at all-time highs. Go figure. Cool. Hey, before I don't want to leave the stream. I don't want to end the stream without first just promoting our giveaway we're doing today. And if you missed it, if you missed the giveaway, if you are a Benzinga Pro user, only if you are a Benzinga Pro user, you can enter for the chance to win. AB, did you see what the giveaway is today? Did Mitch tell you what the giveaway is today? AB, did I lose AB?
Hello?
Yeah, can you hear me?
I can hear you.
Okay. Did you see what the giveaway was today? That we're doing in honor because of Halloween?
Is it a free trip to the Benzinga Halloween party?
No, I don't know if we're doing a Halloween party, man. And if we are, I don't even know if you're invited.
True. I mean, I haven't gotten an invite, so that's what I figured.
We had the party last night at the bar. That's what we did.
No, tell me what the prize is. Is it
it is
Benzinga Pro related? Would be my guess.
No, it's got nothing to do with Benzinga Pro.
Okay.
Nothing to do with Benzinga Pro or Benzinga. I want to see. Okay, so I thought they would have announced it on live trading. And I'm just checking to see if they did, because if they didn't, I don't know if I was the person that was meant to announce it, and so I don't want to like screw it up, because I thought Mitch had already announced it. So if he didn't though, then I don't want to like mess up the.
Oh, come on, man! You can't talk about it and then not tell us.
So no, it's not Benzinga Pro. Oh, I guess he didn't say anything apparently. All right, I think I'm allowed to.
Do it.
Wait, $1,000, right? I'm getting that right. $1,000. I believe it was $1,000.
Wait, we're giving $1,000 away?
I mean, not to you or me. So that's pretty cool.
Did we ask Luke?
We did ask Luke. Wait, wait. This is embarrassing because I thought I just went to look up where I thought the details would be, and they're not there. So, Mitch, if you're watching, come save us, because I want to make sure I get this right and don't completely butcher this promotion. Because I just went to look up where I thought the information was going to be listed, and the information was not. So, Chris, I know you're watching. Save me if I got that wrong, but I thought it was $1,000.
That's a good idea, Cranky Buzzard. It should be $1,000 or tickets to the Lions Thanksgiving game. You get to pick.
Yeah, yeah, Chris. I know there's a promo here. You know what? Maybe.
Hey, Zinger.
There, you found it. You want to play the promo?
Do you want me to?
Yeah, just play.
Hey, Zinger Nation. Happy Halloween. We thought we'd celebrate with a $1,000 giveaway. Yes, I said it. $1,000 in cash giveaway. All you got to do is be a Benzinga Pro user to enter. And if you're not, I have a loophole for you. Sign up for a free trial, no credit card needed. Of course, follow Benzinga, hit the retweet, comment below for a bonus entry. You can put your favorite costume or gift idea. Of course, include the pets if you got them. And we'll see you at the Zinger Nation Halloween special.
Okay, so you got to be a Benzinga Pro subscriber to enter the contest. That much is obvious. And then Thank you, dude. Chris Cocke is like saving my butt right now because he's putting. Thank you, Chris. Dear Lord. Oh man. Okay. I'm gonna paste the link.
Can Chris save my portfolio too?
I don't know if he's that good. Thank you, Chris. He just put it in chat. I'm gonna put it in chat again. Holy moly. That was embarrassing because I literally went to like a Slack thread and then it was not there. And I was like, shoot, I don't have the link or anything to this promotion. So now we do. The link is in there. Holy cow. It's Friday. I got to get out of here, man. It's been one of those days. So anyway, Benzinga Pro Halloween gave away $1,000. $1,000 in cash, or maybe we'll give it to you if you want it in like Sheeb. We can maybe arrange that. I don't know.
The transfer fees might be expensive for that right now.
Maybe right.
But Spencer, it looks like we have a nice little cannabis video coming up after this. Let me make sure.
Okay. Wow. What is going on today? It just feels like we're flying by the seat of our pants. It is what it is. All right. So, yeah, that video, as I understand it, is set to go at 1:30 AB.
Oh, all right. So we got 13 minutes to kill.
I mean, we don't have to stay on until 1:30. But the other Aaron, the intern, says it's ready. It's ready to roll. So, all right. Before we go, though, let's just see if there's anything left in the chat that we missed. Any other tickers we want to bloviate about?
Does someone know any more than the markets about, like, are we going to see more volume come in before the end of the day? Or is today one of those Fridays where it's just kind of a lull all day?
It's not like an options expiration or anything. So, no. Well, I don't know why we'd see more. I don't know why we'd see any unusual volume today.
I have Shinigami is asking me if I signed up for Benzinga Pro. I've tried to get the team to get me on Benzinga Pro, but they try to give me a test about the markets before I can get into Benzinga Pro, and I keep failing the test. So Shelly's saying it's a sleepy Friday. It's a yawner. That's what I'm feeling too. I mean, we've got volume coming into, the big Apple, Google stocks, but it seems like it doesn't seem like we're getting like an absurd amount of volume anywhere today.
Yeah, agree on that. It's a freaky Friday, Antonio says. I want to know what everyone's going to be for Halloween this year. I'm not a big Halloween guy. I think you can probably tell that, but drop it in the chat. Let us know what you're going to be for Halloween this year. I'm just curious. AB, you have anything or no?
If you're a fan of our YouTube, then you've seen me in a mouse rat costume before, so I'm probably gonna do that. Just because it's something that I have and I don't have to go out and buy a new costume. But if you have any ideas, I've floated some other ideas around. Ted Lasso, Joe from You.
That's a good one, man.
I have friends that try to tell me that I look like the guy from Joe from You, but I don't see it. So I don't know how I would do that costume, because I think he just wears kind of like generic clothes.
Yeah.
But if anyone has any good ideas for me that are kind of like low maintenance, let me know, because I'm definitely.
Sorry, I didn't mean to interrupt you, but we're about to break 1100 on Tesla.
Really?
Yeah.
So maybe that's where all the volume is today, is on Tesla.
We're right there. We're right on the doorstep of 1100.
Oh. I had a crazy Tesla trade this week, Spencer.
You want to tell us about it before we go?
Yeah. Let me try to find, can I see my history here? Oh, yeah. So early.
Shelly's funny, man.
What Shelly?
Shelly, you do look like Ben Shapiro.
No, I'm not. That would actually be kind of funny.
You do look like him.
That'd be funny.
Anyway, go back to the Tesla trade.
All right, so let me zoom in a little bit. So when Tesla was making its crazy move on Monday, I believe, October 25th, I bought a $1,650 call that expires today. So for this contract to be worth anything, or to be like exercised, the stock would need to be above 1,650. And there was so much volume coming into Tesla that I was actually able to sell that contract for about like a 20%, more than a 20%, 30% gain. I don't know what $70 to $99 is, but at one point it was even more than that. And I could have sold it for more, but I held on to it for a little too long. But for that contract to be going up in value as a $1,600 dollar strike price with an expiration of today, which is crazy to me. I mean, I don't know how much more YOLO you can get than saying Tesla can rise by 50%.
70.99 is a 41% gain.
What's the Soldier Winter?
I don't know. Wait. Let's read some of the comments in the chat for people from Halloween. For Halloween, what they're going to be.
Telling someone they look like Joe is like telling someone they look like a creep.
Yeah, I mean that's correct.
I've never seen an episode of the show. Like I know the premise.
He's really creepy, man.
So probably I don't want to be associated with him. So maybe that's not a good.
So we're back on the Ben Shapiro train. Is that right?
Squid Game costume. I feel like that's going to be like every year there's like one super popular Halloween costume. Last year it was Tiger King, people dressing up as what's her name? Carol Baskin and Joe
Exotic.
Joe Exotic. This year I think it's going to be Squid Game. Everyone dressing up in those red costumes because it's easy. You got like the hood, the mask, you're set. From Marvel. All right. I'm not very well versed in the Marvel universe, but I'll look into Winter Soldier. Check that out.
I mean, yeah, I don't know. He's just a generic guy. He's a generic white guy.
Yeah, I get told I look like that all the time. Just a generic white guy. So, any generic white guy costumes, throw them out here. No cultural appropriation allowed.
Anyway, okay. I think we'll probably hop off. I know that video is set to go live at 1:30, and so.
Well, here, let's see if we can crowdsource a few more Halloween ideas. I know we've got a smart, good-looking chat. I think they've got a couple more good ideas in them. Let's see.
Wait, where? In all seriousness, where is the rat suit? Is it over there?
No, I meant to. So it was like it's been in the office for like months, and it's actually at my apartment now because I wore it the other day to a Halloween party. And now it's sitting at my apartment. I meant to bring it today, but I forgot it. So I've got this little trusty crown instead. Cranky Buster wants us to check in on Affirm again. We talked about Affirm earlier. I don't really have any thoughts on it, honestly. Like the stock looks strong. It keeps going up, but I don't have any like big thoughts on the.
Do you want to look at like the calendar for next week because it's a doozy
for earnings?
Yeah,
let's do it.
We got some big ones. You got
so you're sorting by estimated revenue right now?
Yeah, so this is what I always do. So I went to my pro, I went to my calendar, earnings, I filtered it by next week, and then you can sort by importance. Like that's cool too. But I like to sort by this column, estimated revenue, just to give me an idea of like who are the biggest fish, right? The biggest fish reporting. So you get boring names, right? CVS and McKesson, which are known but boring, and then you get some like wild ones like Activision Blizzard, right? Is on here. If you go down, and so we got some big names here. Names like T-Mobile, names like Qualcomm. Mondelez will be really interesting. Not normally because it's a food stock, but in this inflationary environment, I'm interested in food stocks right now and just seeing what they say. So I'm into that Mondelez report. That's on the second after hours. What else do we have reporting? We've got.
I like Pfizer. I mean, Pfizer is going to be interesting, right? Jay Rice. I was just going to ask if you're still in the chat. I see you.
Marriott, Avis, Caesars.
Oh, that's a good idea, Jay.
MGM Resorts.
Juan, yeah, we were talking about your Ford calls the other day, and we said you might as well hold on. Ford ended up reporting good earnings. I don't know when they expire, but if you're in the profit, I would just say take your profits. You cannot go broke taking profits. I've learned the hard way. Too many times I've held an option contract that I was once up, 10, 20, 30, 40% on, and then ended up losing the money. So if I were you, again, I don't know your expiration date, but I would take your profits. Learn from my mistakes as I have not. Christian Gallagher also sold out of his Ford calls today.
Nice.
But Jay Rice, I was going to put an ask out to you. We see some of these companies reporting earnings, and I have a couple that I think, something like Pfizer, I don't have a thesis that it's going to go up or down, but I think it's going to move a lot off its earnings. So if I want to play an option strategy where maybe I buy a call and a put, and as long as it moves a certain percentage in either direction, then I'd be profitable. I want to know if you have thoughts on that, kind of how to play those options. I don't know if that's a straddle or a strangle. I know it's one of those. But finding some stocks that are reporting earnings next week that might be good ideas to do those on. Because like I said, I don't know if Pfizer is going to go up or down, but I'll bet that it's going to move 5% in either direction, at least.
All right. 5% though for Pfizer?
Look what Moderna did last time they reported. Or what did Pfizer do last time it reported?
Let's see. Pfizer's last report. I don't have it here. Let me get it up on the chart. No. Go back. So Pfizer's last report actually, because their earnings, it was like like July. Here we can look it up actually. Let's go here. We'll just search for Pfizer. Go all.
Okay, maybe not. Maybe Pfizer doesn't move as much as Moderna or some of the other stocks, but
Pfizer's last report was July 28th. Pfizer's not a big mover, man. July 28th, right there. Yeah, Pfizer ain't a big mover. Pfizer's stodgy. 5%.
Okay, so maybe Pfizer's not the one to put a strangle or straddle on, but there will be some movers. Okay, expected move for Pfizer is 2.1. IV is only 42%. All right, so I retract my statement. Probably not the best stock to put a option strategy out like that. We need to find one with a higher IV, one that is going to move a big amount in either direction. So I'll do that after the show today, Spencer. I'll go through the earnings next week and see which stocks I think will be a good pick for that.
I guess we'll talk about it on Monday, right?
Yeah, let's do it.
All right. In the meantime, we have normal programming, right? We got a video coming up right now. Interview we did with Bruce Linton that'll lean into Moon or Bust at 2:00 at the close with myself and Joel at 3:30. Money Mitch at 4:00. And that's the way the cookie crumbles, I guess. So,
all right, everyone, have a great weekend. Have a safe Halloween weekend. Hope everyone has fun and has some great costumes. If anyone's got some good costumes they'd like to share with us, please email us at shows@benzinga.com.
do it.
And with that, we will see y'all on Monday.
Aaron, please don't eat too much candy, man. I know you're gonna just you're gonna get a tummy ache, man. You're gonna call me. You're gonna be it won't be good. So just don't eat too much candy. All right.
I know my dentist will thank you for giving me that. Speaking of that, I don't think I've been to a dentist in a few years. I should probably schedule an appointment. All right. With that, everyone have a great weekend. Stay safe. Email us some costumes. Love y'all. Peace and love. ZingerNation.